Activist investors are becoming bolder than ever. In the first half of 2024 alone, they launched a record-breaking 147 new campaigns. And if there are any real deal activist investors out there, it's definitely Elliott Investment Management. They've often been cited as the most feared activist investor on Wall Street. When they make moves, it drives headlines. Today, we'll dive into some of their most notable campaigns that they started this year, and we'll take a look at if their targeted stocks could be a potential buy. We'll also answer the question that will probably be on your mind by the end of this video. And that's, do these guys actually beat the market? But first, what the heck is an activist investor? Activist investors are typically individuals or institutional investors, such as specialized hedge funds, that acquire a significant minority, that's a key difference, stake in the publicly traded company, with the aim of influencing how it is run. I point out that the minority stake is different because activist investing slightly differs from a subsection of activist investing that you may have heard of called corporate raidership. Activist investors typically acquire a significant minority stake in the company with the goal of influencing company management without taking full control. Whereas corporate raiders usually aim to acquire a controlling interest of the entire company. Their approach often involves buying a large number of shares to gain significant voting rights or swing a majority of voting shareholders. It's a more extreme version of activist investing. Elon Musk's takeover of Twitter is an activist play, but it more so falls under the subsection of corporate raiders. For a fascinating book on corporate raiders and leveraged buyouts, I highly recommend checking out the book Barbarians at the Gate by Brian Burrow and John Hellier. Let's talk about Elliott Investment Management. These are the most notable companies that are under attack by Elliott at the moment. We've got, of course, Starbucks, who have made some huge announcements this week that are definitely coming from Elliott. And then we have Southwest, who's in the midst of one of the biggest proxy battles of all time, where Elliott is fighting for 10 of the 15 board seats. And then we have Match Group. Over the past 5 years, the stock has been pummeled pretty significantly, but it finally seems like the turnaround might be coming through, and it might be because of the effect Elliott's had. All right, let's talk about Elliott Investment Management and Starbucks, because there have been some crazy changes this week. Starbucks only confirmed that Elliott was involved with the company on August 1st. And it makes sense that the activist sharks are starting to swim around the waters of Starbucks. Virtually every metric at Starbucks is going in the wrong direction. According to their last quarterly report, they have negative sales in China, which is a key growth initiative, negative sales in the US, a declining number of new store openings. It's one of the worst quarterly reports I've ever read. They just announced yesterday that Starbucks would be shit-canning their CEO and replacing him with Chipotle CEO Brian Niccol. And Brian Niccol's probably the best leader in the food game right now. Just on this news alone, shares popped 21%. And this does interest me. I think it's a great company that has a great product, and caffeine is addictive. It seems like Elliott is making big moves on Starbucks. I'll be curious to see where they go from here. I won't be buying after this euphoric pop. Turnarounds do take a while if they do work, and I think that the share price will go down. And if I'm wrong, I'm happy missing out on this one. But that's not Elliott's only play in motion right now. They're also in the midst of a crazy proxy battle with Southwest Airlines. This is one of the most aggressive campaigns I've ever seen. They're seeking 10 of the 15 board seats. And when I took a first glance at the names that Elliott's putting forward, it seems like they've nominated some really, really good industry insiders. They've put names forward like Michael Cawley, the former Ryanair deputy CEO. They've added Robert Milton, former CEO of Air Canada, Greg Sartesky, former WestJet CEO, Ish Sundaram, former JetBlue executive vice president, David Cush, former Virgin America CEO. They've also put forward some govies. We have Sarah Feinberg, a former federal transportation regulator, Nancy Kilfire, former McKinsey senior partner and a Treasury Department administrator. And they have some finance folks. They got Josh Gottbaum, a former Lazard banker and White House appointee. They have hospitality names like Dave Grissom, a former Marriott International Group president. So they're bringing in some really, really great minds. And Elliott has showed their hand a little bit more than they normally do in the Southwest battle. They believe that Southwest is the most compelling turnaround story in the airline industry, which has been distraught for about a year or two now. They criticize the company's poor execution and leadership's stubborn unwillingness to evolve the company's strategy. They've released 2 public letters so far, and in the first letter, their proposals include upgrading leadership, but you could also take it as the CEO's days are limited, As soon as they get board control, that's kind of a given. And then undertaking a comprehensive business review, which they talked about updating their IT systems, which if you remember about a year ago, when they had that large IT outage, that seems like a pretty pertinent decision. And the second letter is more so a continuation of the first letter, expressing that leadership still hasn't been complying. So how is the stock done? Southwest is down about 48% over the last 5 years. So this would be getting in pretty early in the turnaround. However, I'm not too interested in airlines because it's one of the few businesses that people really don't care about anything other than the ticket price. And they've been a value trap for so many investors over the years, including Warren Buffett, who has called himself an aeroholic before. Charlie Munger has a really fascinating take on the airline industry. Basically, because the government gets involved and bails them out whenever they get into trouble, they play Russian roulette with each other all the time. They race to become unprofitable, they get bailed out, and then it comes back up. And the cycle just continues to repeat. And then third on our list, we have Elliott's involvement with Match Group. In case you haven't heard of them before, Match Group is by and far the largest online dating platform. It's a conglomeration of a bunch of different companies, including Tinder, Hinge, Plenty of Fish, BLK, etc. This activist play started in January of this year when they took a $1 billion position. And their activist campaign has been pretty successful so far. In March alone, they successfully secured 2 board positions, adding Laura Jones, the CMO of Instacart, and Spencer Raskoff, the co-founder of Zillow, to the board. I'm less impressed with these 2 appointees when compared against the list that we saw going into Southwest, but it does show that there's cooperation between the 2 companies. To further highlight that Match Group is cooperating with Elliott, they've entered into an information sharing agreement in order to facilitate an ongoing collaboration towards the board's goal of driving sustainable value for all shareholders. The stock is down 22% over the past year and down 64% over the past 5 years. Perhaps the turnaround is starting to work. Shares are up 9% this month. And it looks like that growth is accelerating. It's a very normal activist play to start spinning off unprofitable segments of the business. Maybe that's next for Match. So of these 3, I'm gonna sharpen my pencil on Match Group. That business falls closest within my circle of competence because throughout my over 10 years as an investor, I've had my best returns in the technology space. If you'd like to check out my full analysis on the company, you can check it out on our Flank platform. Okay, does the big bad wolf Elliott Investment Management actually beat the S&P 500? The business has been around since 1977, but they are a private company, so it's a little bit hard to get the exact information. From what I was able to dig up, it looks like they have underperformed the S&P 500 pretty significantly. A coalition of institutional investors published a study in 2021 that talked about Elliott's performance, and the results are pretty terrible. Elliott's annualized 5-year return was 9.21%, whereas during that same period, the S&P 500's was 16%. They've even failed to outperform a 60-40 blend, which I'll be honest, I was really surprised by. And if you've been following this channel for a while, you probably know exactly why they've lagged. It's the fees. Elliott Investment Management will try to make the claim, fees are one of the most toxic things to long-term performance. It directly interrupts the compounding process. The S&P 500 is a formidable opponent regardless of fees, but when you account for fees, it's virtually impossible to beat. I love referencing this, and if you've heard it before, I'm sorry. Warren Buffett made a very famous $1 million bet where he said that no hedge fund over a 10-year period would be able to beat the S&P 500. And the results weren't even close. The S&P 500 smashed the hedge funds. And not only did Elliott fail to beat the market, but the investment bank Lazard published a study asking the question, do activists in general beat the market? And the answer is a pretty resounding no. However, there was something interesting in this study that they tracked 5 days after an activist play was announced, and activist investors do cause a pop in the stock. But over the long term, the results are mixed. They also broke up activist investing into more subcategories. They talk about leading activist hedge funds, other activist hedge funds, long-only institutions, and episodic investors. And you can see from this chart here that the excess 5-day return is pretty promising. But again, this is 5 days. And unless you're trading on insider information, which I highly don't recommend, you won't know an activist takes a play until it's publicly disclosed. And then Lazard breaks apart into the long-term performance, and this one is promising. Out of all of these different types of activist players, leading activist hedge funds did see a modest outperformance of the S&P 500. But from this chart, you can see that the results are pretty mixed. Some years we had some pretty serious outperformance. Other years, it did worse than the S&P 500. So I like studying activist hedge funds, and I think that when they publish their research and their reasoning, I think there can be a lot of insights that you get from it. I wouldn't jump into the euphoria the moment it happens, because we do often see a short-term pop, and oftentimes that does fade. But when we start to see that the companies and their activist investors are starting to work together, and we agree with the direction the activist investor is taking the company, it can be worthwhile to follow the company into the stock. But between you and me, I would never invest directly in one of these activist funds. I know with the fees, I'm most likely going to underperform in the long term. And that's one of the biggest secrets of Wall Street's. Their fees kill our long-term performance. Where I think that activist investing could go over the long term is that it's more of a coalition of individual investors. There are things that we don't like about so many companies, and individual investors are often not really listened to. It's the institutional guys that get the seat at the table, which is why we're trying to build Flank, whose mission is to empower individual investors to restore stakeholder capitalism and tangibly reduce the wealth gap. You can become a flanker by signing up for our Patreon, where you'll get access to our Discord with over 200 members, as well as early access to our Flank investing platform, which walks you through exactly how to research a company like Warren Buffett, using pure fundamental approach and trying to reduce the noise. The Flank investing platform's goal is to make intelligent investing less lonely, intimidating, overwhelming, and boring. Thanks again for watching. We'll see you next time.